Thank you very much. This next brother, I like to call him a brother because he is of Caribbean heritage. His parents are from Barbados, and he's one of those people who have gotten to know Vice President of Risk and Capital Markets in the Financial Institutions Group at Goldman Sachs, and jointly manages the debt capital markets business for U.S. and Bermuda-based insurance and reinsurance clients. So he definitely is there in Bermuda, Minister Miners. He also provides risk management advice to insurance companies with specific focus on capital markets, reinsurance. Ladies and gentlemen, our keynote speaker this morning, our final speaker in case, let's put our hands together and welcome Mr. Wendell Dave Dowrich.
Thank you very much, Felicia. Protocol having already been established, ladies and gentlemen, thank you so much for bringing our Caribbean weather to New York. I have no complaints about this at all. Truly honored and humbled to be given the opportunity to address you this morning. Before I begin, a Goldman Sachs disclaimer that the remarks I will make reflect my own views and not those of Goldman Sachs, so duly noted to the press. In reflecting on the topic that I should choose as the subject of my address, there were a couple of things that crossed my mind. Similar to Morgan, from my own personal experiences of attempting to be an entrepreneur in the region, I would say that I've put those temporarily on hold. And after some thought and moderate suggestions from others, I thought, perhaps that discussion is better served for probably a stronger beverage rather than over breakfast, and so we'll defer that topic. I also consider certainly talking about my recent attempts at introducing my firm to the region as well. Again, another topic probably for a similarly constituted beverage. Instead, the approach I decided to take was actually to step back and try to see the Caribbean as an investment thesis when compared, I would say, to other broad geographical jurisdictions. How to be compared with other sovereigns as measured by some relatively simple metrics. How and where are we on the basic ingredients that would entice investors to the region, for example, infrastructure, telecom, etc. And then finally, assuming that we can come to some agreement on those answers, what additional steps can or should we take to further increase our share of the investment dollars, i.e. the proverbial competing for wallet share. So the first baseline of our discussion, if you think in terms of purchasing power parity adjusted GDP, the economies of the current 15 full-time members of CARICOM represent a total of about $90 billion in US dollars. Of this, I think we all know Trinidad is largest at about 27 billion, Jamaica at about 21. Haiti, of note, is third at about $12 billion. I think as of year-end 2010, Barbados is about $5 billion, St. Lucia and Antigua around $2 billion each. If you consider including the associate members of CARICOM, we get to just under $100 billion GDP. In terms of comparison to other sovereigns, I think Mr. Brillo actually mentioned this earlier. Around 2001, 2002, Goldman Sachs created a group of countries that our research team started to follow. It's Brazil, Russia, India, and China, as David mentioned, we call them the BRICS. Just as perspective, within the BRICS, Brazil's GDP is about $2 trillion, and that's trillion with a T, folks. Russia and India around 5, China we know is way out there around $10 trillion, and as we would say in Barbados, these things very big. But why do we or should we even care about the BRICS of the day? I think we should care, or at least be cognizant of them, quite frankly, because other people do. Other people actually care about the BRICS, and in this vein, as my grandmother would say, it would serve us to be a little bit gypsy in this regard. Now, the interesting thing about the BRICS, I would say, is that it's essentially a man-made group, right? That there's no geographical sort of similarity amongst the BRICS at all. When you compare them to Southeast Asia and Latin America, two regions that by far have dominated sort of compound annual growth in foreign direct investment probably over the last 25, 30 years, there's no geographical similarity at all within the BRICS. But what I believe we see amongst them, however, is an extremely aggressive marketing of their respective economies. for investment opportunities. Of course, marketing 101 would say that before we sort of proceed with sort of the product price principle in place and promotion and that kind of thing, we have to make sure that at least we have a decent product to go out and market. So how do we stack up? Here, I'll stick a little bit to the home knitting in this regard, as I think we can easily then extrapolate in most cases to the rest of the region. When we think in terms of the basic essentials that I think investors look for when deciding to make an investment, I believe our region stacks up quite favorably, actually. And I'm thinking in terms of the basic things that those of us that don't have several $1 million to sort of talk to Martin after, the things that we almost take for granted. Namely, so I would say essential number one, stability. In terms of political stability, I think our region continues by far to be one of the most stable. Barbados, for one, boasts one of the longest sitting parliaments in the world. And we can count probably on one hand, either my left or my right, the number of instances we've had of political instability in our region. As simple as this may sound, and I think as we all take it for granted, investors like to know they can actually get their money back if they actually need to. It's one of these things. You just trust me on this one. So even though they can sort of look at paper returns and have an unrealized return, sort of at the point of actually realizing that and sort of pulling the money out, they just want to be able to do that. Essential number two, accessibility. Right now, I believe it's possible to get to most of the countries in the Caribbean with flights of at least 3 days a week. Minister Scarrick so boldly introduced a bunch of the senior ministers here as far as tourism folks. So we've got the right folks in the room, guys. If we don't think we have enough flights to the Caribbean, we can simply corner them during the networking session and make sure they give us more. I would say essential number three, ease of doing business in the Caribbean. I think the fact that our region is English speaking is a huge plus. As far as other languages, I think Felicia mentioned this earlier, we still boast one of the highest literacy rates in the world. I'm going to go out on the limb and just simply say that if there are languages that we don't know, I think we can learn them. Turning to telecom, I think simply put, our telecom system works. Right? The mere fact that you can actually call people, the fact that people we have internet sort of all over, that's not an issue either. Furthermore, I think that when you think in terms of, again, the ease of doing business, the Caribbean is actually not time zone challenge versus North America. That's relatively important. Again, I think it's one of those things that we take for granted, but the fact that investors actually don't have to break up the night rest to talk to us is actually not a bad thing. I think myself and several of the speakers that spoke before me can give you multiple stories of having to be awake at sort of less than favorable times of the night, doing conference calls, not doing FETs. But taking conference calls with colleagues in Mumbai, and Tokyo, and Hong Kong, and sometimes all at the same time, which is, quite frankly, at 3 or 4 o'clock in the morning, not the time you want to be doing business. So with those basics covered, let's turn a little bit to the numbers. If we assume that we can use GDP growth as a proxy for economic prosperity and as a further stretch of potential return, when we think in terms of Goldman's current forecast for the BRICS for 2011-2012, that's approximately at 8% return. 8% expected growth, I should say. Interestingly, if you exclude Japan, China, and India, because again, China and India are already in the BRICS, so you don't have to double count them. If you exclude those, the GDP growth for that area is projected to be around 5%. Latin America, as somebody mentioned earlier, is projected to be around 4%. For the Caribbean region, the World Economic Outlook, a body of work that's done by the IMF, has projected growth in our region to be 3 to 4.5%. I think Felicia mentioned that point earlier as well. Within that region, the same source is projected growth for Barbados and Trinidad at around 3%, Jamaica at around 2%. One of my colleagues earlier was mentioning, yes, it's heavily buoyed by Haiti and Guyana, but again, our growth rate, I would say, reasonably compares to that of Latin America. So I'm going to go out on the stretch and say I think we may have sort of the product P actually covered. Switching gears slightly, a common metric that was used in valuations of publicly traded companies is something called market capitalization, or market cap for short. It's simply a measure of a public company's value. It's simply calculated as current stock price times the number of shares outstanding, and it's probably the easiest metric that we've used to at least have a relative size discussion. As perspective, and in terms of sort of some of the brand name companies that we know of, back in December 2001, AIG, for example, AIG's market cap was $200 billion. Now, if you bring that forward just of December 2010, AIG had its issues, and its market cap now is around $90 billion. It's about the same size as I mentioned earlier, so the full-time members of CARICOM. For some additional color, I think as of probably earlier this week, GE, who I think we're all familiar with, their market cap was about $200 billion. And bringing it closer to home, Goldman Sachs market cap, as of yesterday, I think was about $70 billion. My own view was a little low to me, but again, another topic for another time. But why does this actually matter? Because investors are clearly driven by return, not by size, right? So as we continue to work our way out of the last recession, when you think in terms of return of publicly traded companies, just look at the S&P, for example, which is a common proxy for equity market returns. The S&P returned 15% last year. So if we assume that, however, that we weren't all sort of significant and sort of sophisticated market timers and able to avoid the 2007-2008 pain, note, folks, that the 5-year annualized return, i.e. the return at the end, for the 5 years ending December 2010, on the S&P 500 was just around 2%. I caution on using that sort of as an observation period, because the standing joke amongst actuaries, and I'm one of them, is that if you ask a bunch of actuaries any question and ask for an answer, our typical response at first was, just tell me the answer you want and I was going to give it to you. So enough said on the S&P return. But what proxies do we have for returns in our region? I think we can look at a couple of things. And I started to look, this is when Felicia was interrupting me with the texting last night. I started to look at some of the regional stock exchanges and how have they measured as far as return. And for 2010, for example, just measuring, again, the broad market index, the Trinidad stock market actually returned around 10%. Jamaica was around 2%, Barbados had a little bit of a loss in 2010, but again, I think that the issue here is our returns really aren't that far off, right? So the question then becomes, okay, so what do we do with all of this? As I said earlier, I think we are competing for wallet share. I think our product, as I said, I think reasonably stacks up against others. One of the things that, for example, I think we've taken very, very seriously, and I think a comment like this sort of speaks to that, is that we have made sure to continue to push our investment in tourism. Each of the regions represented here has a very, very vibrant, I would say, tourism authority of some sort. We continue to invest in our tourism product in varying degrees. We continue to invest in our tourism professionals because we actually know how important that is to us. Our senior tourism officials, some of them here, take our story to actually those that matter. We try not to leave our story for others to tell it because I think we have a strong view they're not going to deliver it, quite frankly, the same way. And further building on that, we've got organizations, for example, like CTO, mandated which is obviously to provide services and information necessary to support tourism across the industry. My personal view is that if we are to be serious about our investment story, I think we sort of need to give it almost the same level of attention. Perhaps in addition to or instead of having our sort of current overseas-based investment organizations be product focused, those that still are, I think perhaps we can have their divert some of their attention more on telling and selling our investment story to the major research shops, for example, and directly to investors in that case, perhaps in forums similar to this. I think our senior economic and financial representatives should be a major part of marketing our story. Taking time to meet with folks on the street and potential investors at every opportunity. This could include ministers of finance, prime ministers, government secretaries, etc. Why do I say that? As an analogy, for example, when a company considers or contemplates going public, i.e. to begin trading on an exchange, one of the major considerations that they look at is actually who will they entrust this important task to, is sort of who actually has the best research on the street. And not only that, who will actually initiate coverage on their company once it decides to go public. The thinking there is that they need to be sure that their story will continue to be told to their existing and their future investor base. As well, you'll notice that even after coverage has been initiated, CEOs periodically try to get in front of investors. at least if not during quarterly earnings calls. You'll find they have annual investor days, and I think their goal there, again, is very, very simple. Keep taking your story to the investors directly. Folks, we're competing in a similar vein for investment dollars. We therefore need to be sure, I believe, that at every opportunity our story is told on a consistent basis. It's told by credible and trustworthy folks, such as our ministers, and then further reinforced by our teams on the ground who can actually talk the talk of those who need to hear it. Perhaps then a medium to longer term goal would be to have a similar sort of investment version of CTO that could then sort of spread this issue or solve the issue right there across the region. That was sort of my prepared remarks. In closing, let me first admit, though, that nothing is ever as simple as it is, right, folks? I took the last couple of minutes to at least shed some light on what I know is a very, very complex issue. However, I do believe, I strongly believe this, that our unsurpassed ability to actually educate our own people puts us in very good stead to actually solve this. I think littered throughout Wall Street and some of the major investment houses, we can find people of Caribbean origin or Caribbean descent. I'm going to go out on a limb and say that folks like myself would be happy to take the call if we actually got the call. Thanks again for the opportunity to address you this morning. Thanks to Felicia from Caribbean Communication for extending the invitation to me and for tolerating my unresponsiveness from time to time to her emails. As well as special thanks to Jeremy Stevens. Jeremy is an up-and-coming investment entrepreneur in Barbados who actually was responsible for Felicia actually reaching out to me. And with that, I actually look forward to the networking opportunity, and thank you again for your time.